value from success, growth in discovery. Golden Arrow Resources is a well-funded gold-copper exploration company with proven management and prospective properties in Chile, Argentina, and Paraguay. Golden Arrow trades on the Toronto Venture Exchange, symbol GRG, on Frankfurt, symbol G6A, and the OTCQB, symbol GARWF. For more information, visit us at goldenarrowresources.com or call Sean at 778-686-0135.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Mike Swanson, editor of WallStreetWindow.com. Welcome back to the show, Mike.
Oh, it's great to talk with you.
Mike, are there any pre-election jitters in the U.S. markets?
Well, it's quite interesting because in September, the S&P 500 pulled back about 10%, and there was a lot of talk and worries in various publications that this election could see a lot of controversy if it was going to be close, that both sides could contest the results, and Trump very aggressively even spoke to that effect during the debate he had of Biden. So I think that has caused a lot of concern of people that there could be a delay in whether we know who has won for several weeks, something on par with what happened in the year 2000, where there was a lot of contesting going on with the results in Florida, but this time it could happen in multiple states. However, those worries have sort of diminished as the polls and betting odds have seemed to indicate that the election could be in Biden's favor pretty substantially, but who knows? We'll see what happens on election day. But the market has rallied this month a little bit into earnings, hasn't been able to go through that Labor Day high, and I frankly don't think it's going to. And I'm actually skeptical that the market is going to make a big swing one way or the other after the election. What I'm looking at is if we step back and look at the market over the past couple years, like a long-term chart, what is characterized this year, if you just set aside all the news, is that the stock market had a very violent drop, a crash essentially in March. In April, the S&P 500 fell 35%, but then it had one of the biggest rallies in the space of 5 months that it has ever had in its entire history. From that March low up until Labor Day, the S&P 500 went up almost 70%, went up from 2,200 to 3,600. That's a massive gain, not only in points, but in percentage. And it was basically unreasonable to expect that a similar performance was going to happen over the next 6 months. So we're in this environment now where we're not going straight up. We're not crashing. Instead, I think the market is starting to establish what will be a trading range, that perhaps is going to be defined by the high of 3,600 on the S&P 500 and a low of, let's say, 3,100, the 200-day moving average. And I think we may be locked in that range for months, no matter what happens after the election or whether Trump's reelected or Biden is. I think the technical picture of the market is what is going to be the most important element, and not so much the news that everyone is paying attention to. And the companies that have reported earnings, I think, have demonstrated that. Last week we saw several bank stocks report earnings. They didn't really do anything. And today there's been bad news with Google, where the Justice Department in a couple states have come out with the possibility of antitrust lawsuits against Google because they're asserting that they have a monopoly of search engines. Well, that you would think that's bad news for Google, but Google is up 2%. However, that 2% move is not a high for the year, much less for the week. So nothing is really happening despite the dramatic news. So in other words, I think that's going to be the definition of the market. You know, a lot of dramatic news, political news, but with the stock market, I don't think it really is going to matter that much because we've just gone up so much. The market's overvalued, but at the same time, the Federal Reserve is printing money like crazy to help cushion it from any really meaningful stock market declines.
We'll have more with Mike Swanson right after this.
Media recognition from Bloomberg, Reuters, recycling trade publications, patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Avon Resources Limited is a gold exploration company with significant projects in British Columbia and the Yukon. Trading on the TSX Venture Exchange, symbol ABN, and the OTCQB, symbol ABNAF. Surrounded by world-class gold deposits and mines, Avon's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at avonresources.com.
Welcome back. We're speaking with Mike Swanson. Mike, do you think the U.S. government will come out with some kind of stimulus package before the election?
I don't know. I mean, there's a headline now that Pelosi is open to doing something, but frankly, it seems unlikely. The Senate Republicans have shown no sign of wanting to do a stimulus on the size that either the Democrats or Trump want. So it seems very unlikely, but, you know, if there's really bad news about it, it'd probably just make the market fall for a day or two and nothing really would happen. People will just then say, well, stimulus will come eventually, if not next week, then in January, and they'll be waiting for that. So all investors really seem to need is some news to look forward to in the future to buy into, even if there is bad news for a day or two or even a couple of weeks. They can always look forward to something that the government's going to do or the Federal Reserve. And I think everyone does know that there will be a time in which the government, the federal government, will put a huge stimulus package together, no matter who wins the election. I think both Trump and Biden both are wanting to do that when they think the time comes to be able to do so. But I think the real place to look for trades isn't necessarily the stock market averages, but individual stocks that are kind of in trends of their own or sectors in the market that are more attractive than the S&P 500 and the NASDAQ are, or alternative asset classes, which I think gold and silver are among the best places. Both have been outperforming the stock market now since October 2018, and including this year. They've been doing that. For instance, the GDX ETF went from $16 in March all the way up to where it's trading now, around 40. So it went up much more than the stock market did, and it's even up more year to date too. So that's what I'm most interested in. And I think both of them are going to benefit from what may be the most important trend, period, in all the markets that defines everything. And that's the fact that interest rates are basically at zero with nowhere further to go down. And that makes it so for people that want to diversify, the bond market doesn't make much sense, because if you buy bonds, you get no return on your money, and the Federal Reserve is projecting now inflation of 2% next year, and you can't even make that by buying a treasury bond. So that's making it so people that are invested in bonds or CDs, as these things come due, they start to move that money into other things. It could be stocks for some people, but for many people, it's also gold and precious metals. So I think this is an element that's going to define the markets now for the next couple of years.
Would you be buying gold miners, gold stock, gold ETFs?
Well, I personally am doing all three. But it really depends on the individual's risk tolerance. So, for example, if I was someone with the lowest risk tolerance, such as a person that has simply retirement funds and doesn't watch the markets at all, doesn't really feel confident about being very active in the markets, someone like that, I would tell them, look, just take some of that money that you have in bonds and move it into a simple precious metals ETF or fund, which there's several of them. IAU is one of the most popular ones that trades on the New York Stock Exchange, but Sprott also has a couple too, and I own several of these. But if I'm someone that likes individual stocks and likes to make a little bit more money than they would get from simple ETFs that are involved in precious metals, then I would look at gold stock ETFs, individual mining stocks, and if you really want to supercharge potential returns, then I would look at small cap mining stocks because they're kind of like perform like options do, and they can go up 10 times in value, but also go down quite a bit if you get in the wrong time on them or buy it too high of a valuation. But I think we still got a good opportunity with them.
Is one of the advantages of a small gold company you can call up the president and CEO and talk to them, or they'll even invite you to come tour the property?
Oh, for sure. Definitely. But to take advantage of that, you really need to kind of be looking at a couple of them and pick and choose, because you can call any of them. So it's kind of, you can't invest in all of them, so you kind of have to pick and choose which ones you want to do that with. And, that's one good thing about the HowStreet.com website. There's a bunch of companies being covered or that you interview on there that are worth checking out.
We'll have more with Mike Swanson right after this.
Engineer Gold Mines is focused on the exploration and development of the historic high-grade Engineer Gold Mine situated 32 kilometers southwest of Atlin, British Columbia. Engineer Gold Mines is fully permitted for surface and underground exploration with the drill program now underway. Engineer Gold Mines Limited trades on the TSX Venture Exchange, symbol EAU. For more information, please visit us at engineergoldmines.com.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Mike Swanson. Mike, what's your view on the U.S. dollar right now?
Well, frankly, that's the most interesting thing I believe that I'm watching right now, even though it doesn't do a whole lot on a daily basis. The U.S. dollar, I believe, is in a bear market, and it had its steepest drop in several decades in the month of July, and it became extremely oversold. And typically when something has a giant drop, and then gets extremely oversold, you get a giant rally. The stock market is an example of that. But in currencies typically will do that too. But when a currency is in a bear market and gets oversold, it doesn't have a giant rally when it's in a bear market. So that's what the U.S. dollar index has done. It's simply worked off that oversold condition by having a very weak bounce and drifting sideways for almost over 2 months now. And it's in a position where it could break down and make a new low for the year within the next couple of weeks. And if it does that, I think it's going to be very meaningful, a confirmation that it's in a bear market. And it'll also spark the next move up in gold, silver, and these mining stocks. So that's what I'm watching the most closely right now. And there's several currencies that are in a position to go to new highs not seen in 5 years. I'll just name one. That's the Swiss franc. It's the least volatile currency historically in the entire world. And if it breaks out of a 5-year high, that's very meaningful. So that's something I closely have my eyes on. And I own a small position in it by owning the FXF ETF, which tracks it. So if anyone wants to watch one thing, that's what I would be watching.
Are there other areas you're keeping an eye on right now?
Well, we've also seen several agriculture commodities make big moves over the past couple months. And one thing about commodity bull markets, when you have big moves in gold and silver, typically what will then happen is these soft commodities will then start to go up. And then in the cycle later, energy will go up, which energy certainly hasn't started to do that. But this month, the price of wheat has soared and taken off. Wheat was trading around 480 in July, the wheat futures that is, and now it's at 630. It's way above its 150-day and 200-day moving averages. So that might be the sign that other other soft commodities are about to soar. Corn has also made a big move, and there's an ETF that I also own, DBA, which tracks all these soft commodities, which has gone up to touch the $15 level, and it's now consolidating below it. And if it can break through that, it'll have done something it hasn't done for 9 years, which is make a new high and then make a higher high. So that again would be a meaningful long-term secular pivot move that I'm eyeing too.
Are we going to see any action in crude, or is it pretty well dead on the water right now?
I think it's sort of dead in the water. It doesn't mean it's going to crash, but I just think it's in a commodity bull cycle. It tends to be the last one, or energy as a whole, to go up, and it might be another 12 months for it to happen. Probably what we need to see first is more higher moves in the agriculture commodities, and also the U.S. economy to sort of have what would feel like a boom to people, which we're not there yet. I don't think that's going to really happen for another 6 months. But oil could be a story, and certainly something I'm watching for next year to start to go up, especially these energy stocks. And it could be that they put in a bottom. Exxon is trading under $34 right now. It was at 50 in June. The low is 30. You know, if we can hold that $30 level or above it for the rest of the year, that's probably a great sign that it's bottoming out and could make, you know, a big rally starting next year. And that would be symbolic of all these energy stocks. So I think there's hope there, for someone who makes a long-term investment buy, but it doesn't have immediate upside momentum. You're going to have to wait on it, but that's okay. You know, ignore things like Tesla, Facebook, which soared a whole lot, this year, and I don't really think have great upside potential. I think someone investing in those stocks could do very well by selling out of them and buying Exxon. But, you know, that's, would take time to realize that that's, a smart play.
Is alternative energy picking up pace?
Some are. I mean, the futures prices aren't, but things such as uranium stocks, they have done well, this year. For example, Cameco plunged all the way down to 550, and soared all the way up to $12. So that was a giant gain in it. But there's a lot of speculation in alternative energy. These energy battery stocks are kind of the things that went crazy this summer, being linked to Tesla. But that's a trend, you know, I think is kind of losing air. And, I would kind of wait, and see what starts to perk up, by the end of the year.
Mike, I know you like to scan foreign markets to see if there's anything interesting there. Is there anything interesting there?
Well, right now, the two most interesting foreign markets to me are Russia and Turkey. Both, if you measure all the major global markets by cyclically adjusted PE, they are the two cheapest markets in the world. Both have cyclically adjusted PEs less than 8, where the United States is above 30. Now, the Russia stock market, it's just trending sideways. It's correlated heavily to energy, so it may not really take off until next year. It looks like it's just going to simply keep going sideways. Turkey is interesting because it's been in a financial crisis now for over 2.5 years and a bear market, but it looks like it's building a base to launch a rally through its 200-day moving average. And if it were to do that and get above its July high, I think that would be a sign that its bear market is over. So I'm watching what's going on with the Turkey Stock Exchange very closely now, too.
Mike, thank you so much for chatting with us.
Thank you. Great to talk with you.
My guest has been Mike Swanson, editor of WallStreetWindow.com. If you have any questions for Mike or any of our other guests, you can send them to info@HowStreet.com, our YouTube channel, Talk Digital Network. Find us on Twitter @HowStreet. We're also on Facebook. I'm Jim Goddard. Thank you for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.